Hello friends, in the series on the income tax cases, today we will discuss a very important case on section 148. The name of the case is NARESH BALCHANDRARAO Shinde versus Income Tax Officer, and this case has been reported in 451 ITR at page number 149, and the matter has been decided by Bombay High Court. The date of the judgment is 26th September 2022. In this case, the notice was issued to the assessee for the assessment year 15-16 and the notice was received by the assessee in March 2022. That is, the notice was issued after 3 years. So, if we will go by section 149 subsection 1 clause B, according to this, notice beyond 3 years can be issued only if the income escaping assessment is 50 lakh or more. So, it means that if the allegation of income escaping assessment is less than 50 lakh, then the department cannot travel beyond 3 years. In this case, the allegation on the assessee was that the assessee has purchased a property of rupees 40 lakh and the assessee has deposited cash of rupees 20 lakh and 16 lakh in his bank account. When the assessee received this notice, the assessee submitted its reply by saying that the property has been purchased in the name of my daughter and the daughter is also an income tax assessee. So earlier, the summation of the figures of the allegations was more than 50 lakh. 40 lakh plus 16 lakh plus 20 lakh. But if this figure is excluded, because the facts were very clear that the sale deed was in the name of the daughter and the daughter was a separate income tax assessee. The assessee also said that he was only a special power of attorney and the assessee also denied the cash deposit of 16 lakh. It means that the information of the department was not correct. Assuming that the whole cash deposit was justified, even then the limit of 50 lakh was not achieved and the notice was not tenable in the eyes of the law. But the assessing officer did not accept the point of the assessee and proceeded with issuing the notice under section 148, for which the assessee went into the writ petition. The court said that this is a clear case when the facts are very clear that the income escaping assessment allegation is not 50 lakh or more. So the notice which has been issued to the assessee in March 2022 for the assessment year 15-16 is time barred and is beyond limitation. And the High Court allowed the writ petition of the assessee and quashed the notice under section 148. Friends, we have seen that for making the notice valid, the department is issuing the notice in a very blanket way and sometimes they are just adding some imaginary figures like the debit and credit for the same transaction. They are alleging and making it more than 50 lakh. How it is possible that for the same transaction you are saying that 40 lakh has been received in bank account and then it has gone on the same date or for the same transaction. So in all those cases where the income escaping assessment is not 50 lakh or more and the department travelled beyond 3 years, then the writ petition can be a good option. Like in this case, the Bombay High Court has given the relief to the assessee. But in many cases, it has been seen that when the assessee goes for the writ petition, the court says that it is a matter of facts and the department has not done the assessment yet. So you have to participate in the assessment proceedings. So different courts have different viewpoint, but this is a very welcome judgment by the Bombay High Court on section 148 that if the department has wrongly alleged on you that the income escaping assessment is 50 lakh or more, then the assessee can take the help of the writ petition for getting its notice quashed. At the end of this video, once again, I am repeating the name of the case. The name of the case is NARESH BALCHANDRARAO SHINDE versus Income Tax Officer, and this case has been reported in 451 ITR at page number 149. The matter has been decided by Bombay High Court and the date of the judgment is 26th September 2022. Thank you, friends.